Hey guys, hope you're having an amazing day. In today's analysis, we're going to be taking a look at gold, US oil, and Bitcoin. If you're joining for the first time, it's going to be very helpful. Please like, share, and subscribe. And also, I strongly recommend you join our Discord community where we post real-time market updates, trade opportunities, and also more educational content. And if you also like to learn how to trade like professional Forex trader, or you love what we do here at NFX Up, then I encourage you to subscribe to our membership plan at nfxup.com. All links in the description below. So let's get started. As usual, we're going to start with our Go chart, which is the first chart we have here on our screen. And this is the 4-hour time frame, just for reference purpose. So, following up with the recent events, that was what happened last month, the end of the 12-day war, as Donald Trump would call it. And yeah, that was a significant breakthrough, and I think the world was almost at the brink of World War III, and we saw a lot of things happen with crude. Briefly, just show you that here. We'll get back to this later. And then we saw gold as well at some momentum gains. And then following with the end of the war, we saw gold started declining, which we have here on our chat. That decline took us all the way from 34 or 35, 34, 50 down to also late last week rather, at 32.50. So this was all more like a rest, say a reaction from the prospective piece, the truth that was created. And yeah, that was a big toll on the markets, and I think that's already priced in. So looking at the charts, we're going to talk more on the technical aspects, not dwell on the fundamentals. Because lately, I mean, apart from the Iran-Israel war, we still have a lot of war going on. There is still high level of global political tension. Israel, Palestine. We still have Ukraine and Russia on the other side, and a lot of other smaller wars going on. And as well, the US is also having some issues because of the new Donald Trump views. Not everyone is in agreement with that, but let's see what happens. This is the time of uncertainties. So last week we saw gold drop down here and from this more like a bearish trap, because I knew that it's most likely going to be a bearish trap because we don't have enough momentum to to push for sell positions. It's not really realistic. The market is still very bullish. We just had this drop down, and it's possible we could see something like that happen again. Sharp drop, but we're gonna move higher. Like we can see right now, we saw the market went back towards the trend, which we have here. This is a long-term trend, and I believe it's gonna hold. I'm gonna zoom out so you can see how uh pick this from. So it's been coming up for a very long time. So this is a logarithmic chart as well, and Fibonacci trend tool we're using right now. So we have this here, and I believe we're going to see price ascend higher. This coming week, I'm looking towards a target of probably 34.50 again. We should be testing the last highs, which was over there, somewhat around here. And I'm going to put the horizontal line just to give us a good price target. So somewhat around here would be our new test, and as we ascend higher. So fingers crossed, and there's not so much on fundamental aspect to push this, but it's a general narrative as Ava discussed. So let's look out for the bullish momentum this week, and I'm expecting higher prices for gold, way higher prices for gold, and we should be testing which this will be the 23.6% permanent return level, heading back towards our swing high, about towards that level once more again, and I believe we're going to surpass that level in this coming weeks, and probably the next 6 months of the year. We should be seeing higher price of gold ranging toward 3,800, most likely, because the bull run is still very much active. And also this is also currently coinciding with our 200-day moving average, which is currently serving as a support, or price currently around that range, which means most likely we could see price in area. And on the stochastic level, we somewhat around the midpoints. This was the bear curve which we had last weekend. I believe it's already priced in as well, and we had this bull as well. This was from there here, which as well is already priced in, but we should be expecting more bullish momentum over the coming days. And yeah, that should be what we should look at for. So if you actually on the sell position, you should be very careful. Either you close out some of your position or trade very carefully, and mitigate those positions. Either you edge them or do something about them. But I don't see price really dropping really low. I don't see that happening. I see more bullish momentum on gold. That being said, we're going to be moving forward to US oil. But before that, I'm going to just share a quick chat, quick trade setup. If you interest taking a long position. This is a good buy position, so we wait for the breakout above 33.60. Yeah, 33.60. If we get a clear breakout above 33.60, somewhere around 33.70, then we can take a long position, put our XL somewhere around here, and our target profit could be somewhere around here. That's a good position for you. um, but yeah, of course, you can follow our instruction in the Discord community if you need more guidance on that. So now we're going to talk about US oil. So on US oil, like I already hinted, we had that major, price movement due to the tension and the fear of the closure of the Strait of Hormuz. The Iran war was a really, really big problem because that's where 20% of global crude oil trade passed through. So it was a big shock to the market, and the market responded reactively to that threat. So we can see this is a long-term trend, and we had this long-term descending triangle which broke about 3 months ago, and we saw what happened then in April. And also now we have been consolidating below the support level for a very long time. This is a long-term support level from 2023, I think, yeah, or 2022 there about. So it's a long-term support level, and prior to consolidation below this level for a very long period of time until the war started. That's 12 days war lasted, and a lot of things happened in the market. We saw all of this happen: massive bullish momentum and a massive bearish correction. So this entirely changed the dynamics of the market. So right now we're seeing market once again. Price is ranging between the support zone, the higher and lower bound of the support zone, which I believe may last for a while, a short period of time, not very long period of time, but it will last for a while. And when we get a clear direction in the markets, of course, we're still below the 200 moving average on US oil. So if we get a clear direction in the market, that the market is actually going to be heading for lower price, which most likely will be the case because the global supply is still very high. OPEC they cut some of the supply, but it's still very high. So we should be looking towards lower price for crude oil, towards the price of like 50, 55 range. That's a fair price, and if we get that, then good. If we don't get that as well, no problem. We may just range around here for a while, but most likely we're going to be going down because this was mainly a massive price reaction to the war, nothing more. There was no logic global demand that would have cost price. So getting to that 78 level. I hope you took advantage of this trade. If you didn't, then no problem. Just wait. We'll get a clear direction of the market, and then we could look towards a sell position eventually. For our time frame, we still have the same thing. We can see the random chart here. We're just going to use a smaller chart to highlight that on our chart. So we can see that here. We just have this random chart. It's blue, probably better. Yeah, so that's it. So this is the range. So if we get a clear breakout below this range, then we could continue the sell setup. I'm going to put that trade option here. This would be a good setup. If we get a clear breakout below this range, we can put our ASL somewhere around here. And our target probably somewhere around 55, 57, 56. That's a good range. So this is a long-term trade. So this is the possibility that could likely happen if we get this trade breakout below our support level or below the range chart support level. So that's all for US oil, and next we'll be moving forward to Bitcoin, which is our last and our favorite pair as well. So on Bitcoin, yeah, so last week we saw a major breakup of Bitcoin. The first time in a very long time that we saw the net profits loss ratio for Bitcoin increased massively, and most investors who bought at around 100K are finally in good profits. There was a net profit ratio of about $1.2 trillion. That's a lot of money. So the good thing is that many people are not even considering selling their native position right now. Everyone is still hodling, which is a very good thing that propels price growth and also indicates that yeah, investors are actually willing to hold these assets for a long period of time. So we could expect to see price start scaling higher. And like I said, if anything like 2017, Bitcoin is likely going to start moving or picking up from July. I said it last month, and it likely was going to be happening very soon. So the month of June or July rather, we could see price rise to as high as 125K for a start. And I believe that from August and the last quarters of the year, we could see price rise much higher towards the range of 200K as most investors will start picking up from this level, not now. So guys, that's all. Nothing special about Bitcoin. Market is still very much on the hot. There's been a lot of news, of course. Tesla has approved a lot of Bitcoin new policies. Globally, there's been more. It's going to become more friendly. Of course, crypto in general, more favorable policies for crypto assets all over the US and the EU as well. So a lot of companies are buying, a lot of ETF have been approved. So many good news are happening, but the market is yet to pick up and act on those news, So we need those FOMO to get back in, and those FOMO will not happen until we see price above 125K. People want to start, don't want to miss the the train, stuff like that. So for now, guys, stay tuned, and trade safe. Remember what we said: gold is bullish, oil is on a bearish scale, momentum long term, and Bitcoin is on a bullish scale long term. So whenever you're trading, put this into perspective and put it into action as well. All right, guys, take care of yourself and have a successful, profitable trading week. Cheers.